Good morning. Today is Monday the 6th of January. So it's like a back to school, back to work, and markets should now be back to normal. And this is 8 o'clock, just 20 past 8 in the UK. Market makers are back at the desk. So I do have some prices to check my January regular trade. I closed my BTB by the book trade last week for a tiny loss of January closed $70, and the regular trade is pretty safe with a maximum loss about $80 to now we're about minus 65. If the market finally pulls back, I mean now we are about 11 DTE. Now I don't want to go too far towards expiration, so this trade should be closed. And of course, if you want to keep it to expiration, it is still possible considering the lowest shorts are 29.75, so there's really no risk attached to this trade. I kept this trade delta flat to delta negative all along. On Slack I've said that you can of course go slightly delta positive, so if you wanted to now go for another reverse Harvey, there's still about $1.6 here. You could actually even put it a bit lower. You just need to get about $100. So something around here, you get 90 cents here. So this is something you can do. I have reduced the capital usage to 5K so that there's really no constraint with now March being entered. So this trade really is easy to manage. There's really no problem. I refrained from going to the call side. That being said, if you want to go and add a CCS here, you won't get much really. I mean, it doesn't really make sense this late in the trade to go on the CCS side. So on this trade, not much to do. And as I said, if you want to get your upper expiration line above water, it's still pretty easy to do. It depends also, of course, on the capital limit you want to put on the trade. So not much to report here, except as I said that this trade should be wound down and closed probably by end of this week. If I move on to February, February is in a pretty good shape. As you can see, we have achieved what we want to have at this point. So we are 4060 DTE, so a flat delta of a pretty large range. The upside risk is minimal. It's about what, $500 or even less than $500. So really we have, even if we were to aim for, let's say, a 32 DTE, it's a bit of a bug here, 32 DTE, so we could actually do well if we get back into the 10s and maybe even get to some profit targets, but of course we would need the market to drop about 100 points. So really not much to think about. Even 2 DTE, we are more or less around our lowest shorts, which means that there shouldn't be too much to do even if SPX drops pretty sharply. So on this trade, not much to report. Last week on a trade lock, I think we did next to nothing. That was late December, just a small additional layer, which I described last week. So on this trade, not much to report either. The B2B trade has a more classical shape with no additional layers. The upside risk is also limited to about $700. It makes about 220, and it was a matter when the market was really teasing with all-time highs whether it would make sense to complete the mutation towards RTT style, and I didn't. I don't think it is warranted, and probably not now that the market seems to have peaked. This morning the futures, yes, futures are down a little, and this one also has a pretty good shape, flat delta, a little bit more negative delta, not much of a Vega, good delta Vega ratio, which means that even if the market hovers here, it should sustain its theta and basically still stabilize. These delta Vega ratio is only to be monitored if in case the IV is very low. You could have a risk of a vol crush, ATM or ITM vol crush, which is not really happening right now. So this trade is doing well, and it will do better if the market also drops by about 100 points. This time I'm going to close this public video at this point, and I will carry on recording for the for members of the class, where I shall also look at the baby rhino. Bye for now.